and good afternoon. My name is Illa and I am from the Consumer and Investor Office at the Securities Commission Malaysia. Welcome to our Digital Literacy for Seniors program. Today's webinar is on increasing your retirement income with P2P investment. On behalf of the SC, we wish to record our appreciation to higher seniors for their assistance in promoting this program. We are pleased to have with us today Mr. Andre Betker from the AlixCo P2P Financing to present on the topic, Increasing Your Retirement Income with P2P Investments. Allow me to share a brief background on Andre. Andre Betker is the Chief Investment Officer of AlixCo P2P Financing and FBM Malaysia's equity crowdfunding platform. Andre is an expert in evaluating and analyzing startups and SMEs and high-yield debt and equity investments, and has helped a large number of companies raise funds. Now, please stay tuned till the end of the session, as we'll be having a short Q&A session, followed by a pop quiz session for all participants. Also, a reminder to all participants to take part in our survey. The link will be shared in the chat window. Next. Please do follow us on our social media platforms for useful information on investing and latest updates on our initiatives. Now, I will pass over to Andre to share his presentation, Increasing Your Retirement Income with P2P Investment. Andre, over to you.
Thank you for joining us to today's session, Increasing Your Retirement Income with P2P Investments. I'm very excited to have you here today. And the next 30 minutes of this presentation may very well change the amount of money you have for your retirement, how much money you have as an income stream, and I will show you some unique ways you can use P2P financing to grow your wealth. Now, since we have a lot to cover in the next 30 minutes, I want you to pay very close attention, and I will briefly run through some key topics such as what are P2P investments, why do investors like it, what are some of the ways you can get involved in P2P investments in Malaysia. I will share a little bit about our platform, what are the kind of returns you can expect, and what are some of the pitfalls in P2P investment you should look out for. I will also share some unique investment strategies, how you can additionally boost your P2P return by more than 50% on top of what you already get based on the investment notes. Now, one of the beauties about P2P investment is, especially for people joining today, a lot of you are above 55 years old, it's never too late to invest in P2P financing. Since unlike other investments, unlike, let's say, equities, unlike VC funds, you don't have to wait years until you get a return. You actually get a return starting from 1 month later. And this is really the beauty of it. This is why P2P is actually an investment class which is specifically useful and effective for people at an older age who want to have more current income. Now, there are a couple of reasons why you might join today and why you might even consider P2P investment. Maybe you have too little retirement income. Maybe you're not sure how to invest and you have some money on the side. Maybe you haven't saved enough. Maybe you wanted to have for your family, kids, grandchildren. Maybe you want to fulfill a dream of yours. You want to work less, live more. Or you just want to fulfill your own personal dream. You don't have enough money for that. Now, some of the key concerns for people at an older age are, they worry about, is my money enough for retirement? Will I outlive my savings? How can I save more for my family? And how can I fulfill their dreams and their wishes? How can I provide more to my kids? And I will teach you today some key insights, lessons, and strategies how P2P investments can create a high yield income stream for you. So you have significantly more time to spend and less to worry about. Now, let me get right into it. What is P2P investment? Now, the very essence of P2P investment is democratization of investments and financing. And I want you to really pay attention to this sentence. P2P investment is one of the greatest revolutions and democratizations in finance. As an individual investor, you now have the opportunity to invest on the same terms as banks and millionaires. Now, this is a very huge opportunity for you, which didn't exist before. And the Securities Commission Malaysia has been one of the first ones in Asia to give you actually this opportunity. Because previously this was a realm which was limited to banks, to millionaire investors. And now it's opened up to you. And you might be wondering, what exactly is P2P financing? Now it's very similar, it's actually a very simple process once you understand it the first time. It's very similar to a bank loan, except that instead of a bank loan, which the bank provides to companies, in P2P, it's you, it's the individual investor providing money to local companies. So there might be a local company in need of funds, let's say a grocery store. They need $100,000 for 12 months, and they're willing to offer 12% interest for this. Now, instead of the bank providing this financing, it is now individual investors who can provide this financing. And P2P allows us to pool those investors together, to make a group out of them, and let's say to have 10, 20, 30 investors crowdfunding this $100,000 needed by the company, and we channel this money from the individual investors to the company. We handle all the paperwork for you. Now, you might be wondering, why do we need a P2P operator? We are there to handle all the paperwork. We are there to make sure this is a legal process. We are there for you to handle repayments. In case the company doesn't repay, we are there for you to sue the company. We handle all this. We take all the hassle off you. We make this process as simple as possible. And we channel the money from individual investors who want to invest in that company to the company, and we handle the repayments from the company to the investor. So let's say you're an individual investor, you want to give this company 10,000 ringgit, we will channel this money to the company, we will also channel the money from some other individual investors to it, and we will repay you usually on a monthly basis minus a small transaction fee. And you will get back your $10,000 plus the interest minus a very small fee. Now, the difference to banks is that at a bank, you deposit your money, you get a small return, and the bank lends the money to companies. But in terms of P2P, most of the profit actually goes to you. And this is a novelty. Most of the profit used to go to banks. Now most of the profit goes to you. Now, what makes it so attractive to investors? Obviously, one big advantage is nowadays you can become your own bank, basically. You can provide money to companies and collect the interest for this. This is radically new. Second is you get high yield fixed returns. You get returns up to 18% per annum, which is a lot more than the 3 to 5% maximum you get at banks nowadays. A lot of banks nowadays even have 0 to 1%. Which is very hard to even survive on, especially if you're in retirement. You will be struggling if you just earn 1 to 2% or 3% on your money, whereas you could potentially earn 10, 12% in P2P. Third, people like the transparency in P2P. They know exactly which company they provide the money to. They know who will repay them, and they can pick and choose. What investors also like is that P2P investment doesn't require large sums of money. You can start from as low as 500 ringgit, sometimes even as low as 100 or 200 ringgit in many campaigns. So you don't have to be very wealthy to start. You can start from very small amounts and already start collecting interest right next month. One more huge advantage of P2P is portfolio diversification. Now, you might already have some investment like stocks, bonds, you might have real estate, P2P can add another dimension to it. In finance, we call it lowering the correlation of your portfolio, having a lower beta, which means some asset classes might drop during a correction, during a recession, and P2P financing might help to ease this drop a little bit by offering a different correlation with other asset classes. Now, I don't want to go too deep into why companies like it, because I want to focus on investors like you today, but you should also know why companies like to take your money. They like it as an alternative way to bank financing, because they can get the money much faster, and we are a much simpler process as compared to banks. You wouldn't believe how difficult it is for companies a lot of times to get money from banks. And P2P just makes it for companies a whole lot easier to get money fast and to get it flexible. Now, how big is this opportunity in Malaysia? In Malaysia alone, the financing gap is conservatively estimated at $20 billion. So there's a lot of money which can be allocated. You don't have to worry about running out of investment opportunities. Now, you might be wondering, how could I start earning those returns? How can I start getting involved? Now, it doesn't really matter. It also matters, but it doesn't really matter too much which platform you choose. It is the really important thing is that you start taking your financial literacy in your own hands, that you start taking action in P2P investment, and then you research the different platforms you have. Now, there are 11 different operators in the Malaysian market today. They call registered market operators. I urge you to always check on SC's website whether a company is a registered market operator or not, because you should only invest in companies which are registered and which are legal. Then, of course, it is important to take a closer look at each different platform. What type of investments do they offer? Do they match your investment style, risk tolerance? And especially also to take a look if the return and default profile is matching to what you're looking for. And actually, each company is required to publish statistics. So please take a look at the statistics page. Take a look at the default and returns. And you get an idea of how matching this platform is to you. Now, we also recommend that you don't just go on one platform, try to explore a few different ones, not just for finding out which one suits you, but also for diversification. In the unlikely case something should happen to one platform, at least you have spread out your investment across different platforms. A little bit about us and why I think actually we offer one of the best solutions in the market. We are a registered market operator in Malaysia for both P2P and ECF financing. We've had well over 100 deals in debt and equity in Malaysia alone. And together with our joint venture partner in Sweden, we have more than 250,000 investors, funded more than 60 million euros. And we aim to offer you the most transparent access, actually. And this is one of the reasons, one of the aspects which makes us unique. We aim to offer you the most transparent P2P investment in the market, meaning that on our platform, you know exactly which company you provide the financing to. A lot of other P2P operators, you will see that they show you the terms of the investment. They show you how much money the company is raising. They show the interest rate and the risk, but they don't show you the company name. And this is the difference actually for us. We show you the company name. We show you what they want to use the money for and for how long they use it. Now let's talk about numbers. How much return can investors expect? And what about security? On our platform, investors have made an average return of 12% per annum, which is one of the highest in the industry. And this 12% is actually a net return, which means it's after fees and it's after defaults. On average, the interest rate for business financing notes on our platform was 14.6%, which is a staggering amount higher as compared to what you can get at banks. Now, from this 14.6%, we deduct the default rate of about 1%, and we deduct our small platform fees. You might be wondering, what are our fees? We have to charge a small fee in order to survive as a platform and to offer you good service. Usually, it's anywhere between 0.3% to about 2% of the repayment amount, which depends primarily on tenure. The longer the investment note, the higher the fees, since we have more work to do. Are those returns guaranteed? No, unfortunately not. And this is very important to highlight. In exchange for the higher investment returns, you also have to take on a little bit more risk. And this is really important to keep in mind, because this is not a guaranteed return, but you can significantly lower your risk by spreading out your investments across a large number of companies, and by investing in platforms which have a historical low default rate. This doesn't mean it will continue to be low in the future, but at least it gives you a little bit more certainty in terms of your investments. Now, what does a 12% per annum return mean for investments? It means every 10,000 ringgit returns 1,200 ringgit in interest alone per year, which is 100 ringgit per month. This is a very nice side income, especially if you're retired and you get an additional 100 ringgit per month in cash flow where you don't actually have to work for. Now, what about the risks? Which safeguards are in place? 97% of companies serve their payment obligations on time on our platform. This is very high. This means of companies paying on time. What do we do actually to make sure that companies repay? Now we have several steps in place to do the due diligence on our platform. One of the most important parts of the due diligence process before picking companies is that we go in detail and analyze their financial statements. We have an internal mathematical-based Z-score process as a multi-factor model which analyzes companies based on different financial ratios. We have a social scoring algorithm in place, and we pick only a very small percentage of all applicants, since we aim to offer the highest quality of companies to you. Then we require personal guarantees of at least 2 directors and key persons. We have contractual repayments, which are all legally binding, and we have stamp duty paid agreements. All payments are handled over Maybank Trust account for maximum security. So yeah, you don't really have to worry about anything happening to the P2P operator, because we operate over a trust account. This is a legal requirement, and this is also to give you additional peace of mind that nothing really can happen in terms of scamming over the operator side. Then we have, in case there should be any default or late payment, we have agreements in place with debt recovery agencies. We legally enforce all contracts we have. And so far, based on our few defaults which we had, and based on the enforcement actions we've taken, about 80 to 90% of the companies actually repaid most of their obligations after we went on to sue them. So we have a very high rate of recovery. Now, I want to share 2 ways you can earn money with P2P. One is for current income and one is for capital growth. Those appeal to 2 different types of investors. Now, if you're already retired, you might want to focus on current income because it gives you a steady income stream every month. And I have just drawn out a cash flow chart here for an exemplary 10,000 ringgit investment for 12 months, 12% per annum monthly installments. And in this particular case, if you make this P2P investment, you will get paid every single month starting from next month. Principal 833, and interest 100 ringgit, which means you collect 100 ringgit each month in profit alone, just for waiting and sitting. And at the same time, you get paid back your principal every month until 12 months. When everything has been repaid, 10,000, you have received $10,000 in principal, 1,200 in interest. Now, there's another way you can use it. And instead of going for the monthly capital cash flow, you can go for capital gains, which means at the end of each year, you reinvest the money you've received, which can lead to some quite spectacular capital growth over time. Now, P2P has returned 12% per annum on average. If you just reinvest the money at the end of each year, over the course of 10 years, you would have tripled your money with P2P. And at the end of 20 years, you would have made at least 10 times, approximately 10 times your money with P2P, assuming a 12% interest, which has been the historical interest rate in P2P. Now, this is even higher than historically the stock market has returned. And this is a lot higher, as you can see here on this chart, as what you would earn just leaving your money in the bank account alone. So by being a little bit proactive, by exploring the opportunities you have, you can make a huge difference to your capital over time. And in P2P, as compared to the stock market, companies actually have a legal obligation to repay you. There's a legal contract between you and the company, which says the company is legally obligated to repay you. Otherwise, we can sue the company and we can sue the personal guarantors, which makes it, in a way, slightly even safer than equities. Now, I want to share with you also a couple of pro tips. How can you enhance your cash flow and return even further, above and beyond what P2P already offers? Now, for people looking for monthly or weekly income, I suggest creating a laddered portfolio of P2P investments, which means you don't immediately invest all the money you have right away, but you invest a little bit in week 1, then you invest a little bit more in week 2, a little bit more in week 3. And what this will do, as you can see from the arrows below, this will increase the frequency of your payouts, of your cash flows, which means you don't just get paid on a monthly basis. And effectively, you will get paid starting from next month on a weekly basis, or even almost daily basis. You will receive, say, 100 ringgit on Monday, 50 ringgit on Wednesday, 80 ringgit on Friday. So you have a very nice, steady cash flow throughout the year, where you can basically just sit back, relax, sip from your coffee, make investments, and collect those incomes, especially if you're a retiree. And then there's one investment strategy for people looking to grow their capital, let's say over the next 5 to 10 years. People who say, I don't need cash flow right now. I just want to grow my money as much as possible over the next 10 years because I want to save for my personal dream, or I want to save for my family. And I suggest those people immediately, as soon as you receive your interest and principal repayments each month, reinvest it. Because the returns published on the website are nominal returns. Let's say you invest 10,000 ringgit for a 1-year period. In month 1, you already get repaid 1,000 ringgit plus interest. Month 2, you get repaid 1,000 ringgit plus interest. Month 3, you get repaid 1,000 ringgit plus interest. 833 ringgit in this case. So if you immediately reinvest this money, you will get, again, from the second month onward, interest on the reinvested capital, which will significantly enhance your returns on an effective basis per year. This will even allow you to increase a 12% nominal return to 16, 17, 18% actual return on your money. So let's say you have 10,000 ringgit at your disposal. Instead of earning 1,200 ringgit interest per year, actually can easily make 1,600, 1,700 ringgit by reinvesting as soon as you get the interest and principal. Now, how much should you allocate to P2P and ECF? This very much depends on your personal risk tolerance, your personal portfolio. But please keep in mind that some of the best performing government funds and millionaires, they all have at least 10 to 30% of their investments in venture capital, in private equity funds, in high yield investments. And while this might not be accessible to everyday investors, ECF and P2P are actually the very equivalent. It's almost the same as VC, PE, and high yield investments, just targeted to individual investors with almost the same return profile. So by adding a little bit, let's say 5% of your portfolio, 10% of your portfolio to those alternative asset classes, ECF and P2P, you can massively increase your return potential for your overall portfolio by taking on just a little bit more risk. Now, what are some of the best practices and pitfalls when investing in P2P? We recommend to allocate only a small portion of your portfolio to P2P, not more than 5 to 20%. Diversify across P2P platforms. The tip is to check on the platform statistics before investing, because they have to disclose them. Platforms have to disclose statistics as part of the regulations, and so we recommend having a handful of platforms. Third, diversify across P2P issuers, which means across different companies. Ideally, shouldn't have more than 1 to 2% of P2P funds in any single issuer. The more, the better, because in case there's any default, all the other companies will easily make up for it and you won't lose too much on your return. Next, the higher the interest rate, the higher the risk. Please keep this in mind. A lot of investors go straight for the highest returning notes, but we do not recommend this because the risk should match your own personal return profile. And please keep in mind that 15% most of the time is a lot riskier than 8%. You can always check the risk next to the interest rate. Usually it says, it gives you a risk rating which ranges anywhere from A, B, and C. A is usually the safest, B is in the middle, C are usually the riskier notes. Some platforms have different terminologies, but the basic structure is the same. Usually the higher the interest rate, the higher the default risk. Next, invest only according to your risk tolerance. How much can you afford to lose? How much are you willing to risk? Do not put your life savings into P2P. Just put a small amount, which you don't need, let's say, for the next 1, 2, 3 years. Monthly repayments or bullet repayments. Now, different platforms have different payout structures, and you should take a look at it. Do you get paid on a monthly basis? Do you get paid quarterly? Do you get paid yearly? Or do you just get paid at the end of the investment term? And mostly as an investor, you want to get paid as soon as possible, let's say on a monthly basis, because first of all, you can reinvest this capital. Second, you have instant cash flow. And thirdly, it lowers your risk. Now, the longer repayments are, of course, better for the company since they have more time to work with your capital, but they are not as convenient for you as investors most of the time. And lastly, invest in what you believe and what you want to support. Remember, where you put your money can make a real difference. And you're not just earning return on your investments, you're actually making a big difference in the economy by providing this money to companies. You're helping local Malaysian businesses grow. A couple of myths and facts about ECF, which I want to touch upon. You have to be rich to invest in P2P? Absolutely not. You can start with 500 ringgit, even 200 ringgit, 100 ringgit. P2P is not allowed. P2P is a very regulated activity nowadays. P2P allows you to earn a potential high, steady return. This is a fact. You can earn potentially much higher returns as compared to the bank. P2P gives you a guaranteed return. This is unfortunately not true. Please keep in mind that it continues to be a risky activity. You should diversify. Please diversify your portfolio. Don't put all the money in one issuer. A high interest rate is always better. It is always riskier. Let's put it like this, almost always. Please bear that in mind. P2Ps for young investors only? No. Please, especially if you are slightly older, a lot of people might be scared about trying out something new, but actually you're missing out on a lot of return potential if you do. You're missing out on some of the most exciting investment opportunities which have ever been available to individual investors. And young people are actually very much ahead of the curve there. Let me just show you some statistics. You can see the age demographic is still the below 35-year-olds make up 60% of all the P2P investments. The above 55 group is only 5%, which means young people are making most of the return in P2P. And actually, a lot of 55 and above are missing out on this tremendous opportunity, investment opportunity, which has just been opened up over the last few years. Just a few last things I want to make you aware of. Please don't fall victim to scams. Scams have skyrocketed since the onset of COVID-19, and especially they target the elderly. Beware of impersonation scams. This means some people pretend to be from a certain platform. Let's say people might pretend to be AlixCo staff and send you messages over social media or over phone and ask you to transfer money. Please don't trust those people, especially if those are unsolicited messages. And if you have not registered on this platform, please be very cautious not to send money to anyone whom you do not know or who contacts you over social media and who contacts you over social phone. Next, do not send money to anyone when it's not over a legitimate website operated by a registered market operator. We will always send you transfer instructions over the website you are registered on, and not just over some social media channel. Next, only sign up on websites of platform operators which are registered with the Securities Commission. This is very important. You should always check on the SC's website if the company is a registered operator or if it's not licensed, not registered in this case. Then a quick check. How can you know if it's a scam or not? In case a platform promises return which is higher than 18%, let's say they promise 30, 40% per annum, it's almost guaranteed a scam, especially if they offer or claim to offer P2P or lending products. It is illegal to offer more than 18% per annum. And this makes it very likely a scam. And lastly, always check on the websites if the security certificates are valid and if you're visiting the HTTPS version of the website. This goes back to the impersonation scam. Some scammers are very experienced at mimicking certain websites and making you believe that you're on the actual website even though you're not. So please always check. You can, in the URL section of the website, you can click on this, and then you usually can check if the website has a security certificate, and you should closely check if the website is spelled in exactly the way as you find it, let's say, on the SC's website. Now, I would be very happy to welcome you as an investor on our platform. And please take this opportunity, whichever platform operator you sign up on, to make a difference in your financial life, to create additional income for you in your retirement, or to grow your wealth for your family, for your kids, for yourself, to fulfill your dreams. If you want to sign up on our platform and just browse, you can just browse through some opportunities first. You can check out if you like it or not, and only then make an investment. There's no commitment. It's absolutely free to register. Go to www.alixco.com. You just ask for a few personal details, and then you can already start to browse. Just if you want to make investments, you have to follow the third step and upload an ID and a selfie plus an ID to get verified. This is a legal requirement. Shouldn't take more than 10 minutes. Once you're verified, you're ready to invest, and you are ready to collect income and to make your capital grow starting from next month. Thank you very much for joining us today, and I hope you enjoyed this session.
Maybe, Andre, we can move on to the Q&A section since we received quite a few questions.
Okay, let's start let me take the questions one by one. In the event of a default, does AlixCo attempt to claim on the director's personal guarantees? If yes, what is the success rate? Yes, we absolutely do. And we take each company that doesn't repay more than 90 days, we take them to court, we sue them. And we've gotten orders against personal directors, against several of them. This is a very strong legal incentive for them to repay. So far, I think practically every company we've taken along the whole legal process has agreed to make some repayments, because this is a very serious, actually personal burden in case you go along this legal process. We take all of them to court, and the success rate is well above 50%. I would say even close to 80–90% in terms of recovery. Is a 12% return guaranteed? No, unfortunately not. The 12% is a historical return, which is a net return after fees and after our default rate. So we have already deducted the defaults, which have been 1% historically. But this is not a guaranteed return, and it's very important to highlight this to you, because P2P itself is rarely guaranteed. Sometimes some of the investment notes might have a guarantee, but this will be specifically highlighted in each investment note, and usually you will get a much lower return for those investment notes. Let's say instead of 12%, maybe you will get 6 or 7% for those notes which are guaranteed. Okay, the recovery rate on defaulted borrowings, it's similar to the first question. It's, in our case, actually, it's more like 80–90%. Even though, I have to highlight, even though we do recover most defaults, usually it takes quite a number of months for us to recover those. Usually this is a process of at least half a year. What is the current default rate? It's 0.98%, and we are one of the lowest ones in the industry in terms of this. Even despite Corona, we actually managed to lower our default rate from about 1.5% to less than 1%. What has been the historical return? This is a 12% net return I've been talking about, and 14.6% is actually the average return if you invest in every investment note on our platform. But since you have to deduct fees and you have to deduct the default rate, you end up with about 12%. Capital protected, this goes back, no, unfortunately guaranteed, but this is why we can offer you so high returns. And we redeem our investment anytime. Unfortunately, this is not possible. JF Young, Unfortunately, you have to wait the whole time until the end of the investment. But on our platform, most of the investments are between 3 to 6 months. So in most cases, you don't have to wait more than 3 to 6 months until you get your final repayments back. And please also keep in mind that you get repayments on a monthly basis. So let's say you invest in 3 months investment note. Already next month, you get back 1/3 of your investment. The second month, you get back another third of your investment. And the last month, you get back the last third of your investment. So actually, you get back your investment very fast. How much borrowings has the company disbursed? On average, we disburse around 50,000 to 500,000 per company. And in total, it's an 8-figure amount which we disperse per year. An upper 8-figure amount which we disperse per year. What is the minimum investment required? Now, the minimum investment on our platform is very low at 200 ringgit. Most companies, for most companies, we allow you to make investments starting from 200 ringgit. You don't have to put in a whole lot of money.
Thank you, Andre, for the presentation. Before we end this session, I would just like to send a quick reminder to all. Always check that you are dealing with an authorized companies or individual. Also remember to never deposit money into an individual bank account, even if they are licensed or registered with authorities. With that, stay safe, stay at home, and if you need to be out, always maintain physical distancing. Hope to see everyone again at our next webinar. Thank you very much.